It seems the Dropbox stock debate has been getting hotter and hotter on YouTube in the last couple of months, but they've just announced some new features and we're kind of expecting some more lockdowns coming up here. So how should we look at Dropbox moving forward? Welcome back to the channel. My name is Trey, getting in touch with you from Japan. On this channel, we do a lot of small business, entrepreneurship, stock, personal finance, investing. This is like my third or fourth video on Dropbox. I've been looking at Dropbox since about August, and interestingly, we've not seen a whole lot of price change. I've brought out a bunch of concerns about the company in the past, and I also mentioned that I'm not going to be buying Dropbox stock in the past, but a bunch of these concerns have been answered. Some of them it's like, whoa, that's cool. And some of them it's kind of like, yeah, it's a little bit of an improvement. So in this video, I want to take a look at that, take a look at their third quarter earnings report, and then at the end, I'll share what I'm thinking about doing with Dropbox moving forward here. Where we're at in Japan, lockdown isn't really so much a thing. The Japanese government is pretty much just like, hey, please don't go out, guys. But if you have to, it's okay. And everybody's wearing masks all the time anyways, and the infection rates aren't super aggressive or anything like that. But all that being said, Dropbox usage is going up. Dropbox is becoming more popular. Our team freaking loves Dropbox, right?
Yeah.
Yeah, and so we're like sharing files through our different offices and computers, and we're now using paper, and we also are starting to learn more about some of the other features and stuff like that. So I've always loved Dropbox. Super duper easy to use. I film these in 4K and then I put them on Dropbox and then the team can access them wherever they're at. So 10 gigabyte files, 20 gigabyte files sometimes, and it's like not a big deal. It just makes life really super easy. So I've always loved Dropbox as a service, but not been super in love with the financials or the outlook in the short term. So I never really grabbed stocks. We have the stock price chart here. Check it out. Back in August 19th, when we did our first video, it was at about 20 bucks, a little over 20 bucks, gone up to 21, back down to 18, back up to 20, back down, way down to 17. And now here we sit at about 1843. So looking back, I'm kind of like, yeah, I probably made the right call not rushing in with a huge portion of my portfolio to buy Dropbox stock in August. On the other hand, we've seen competitors like Microsoft and DocuSign doing quite well during that whole period, kind of taking advantage of the tech rise. They've been affected, as everything has in the last kind of couple of weeks with all the craziness going on in the world, but Dropbox hasn't changed much. In previous videos, we got a lot of comments in the comment section of people being like, Dropbox is the best because it's system agnostic, Microsoft Teams sucks, I like Slack and Dropbox work well with Slack, so therefore the stock price will go up, you idiot. And so I'm kind of like, yes, I agree with all of those statements, but we need to remember, especially for the new investors on here, we need to remember that just because a service is good does not equal the price will go up guaranteed for sure. There have been a lot of really good companies or really yummy restaurants that have gone out of business, and so I'm not saying Dropbox is about to go out of business, but the financials and the service are often quite disconnected. And again, zooming out even more to our world economy and the stock market in general right now, we're often confronted with wow, huge unemployment numbers coming out from the government, but stock prices go up? We're living in a pretty kooky world right now. So don't forget to hold cash and don't go all in and don't over leverage yourself on anything right now, because I feel pretty confident there's going to be some kind of correction going on. So all that being said, let's look at Dropbox. So my first major concern that I mentioned in previous videos was that they have 600 million users, well 500 in one of the previous videos, and only 2.9% of those are paying Dropbox. They had been in the habit for years of offering a 2 gigabyte free cloud storage thing. So one of my concerns was actually a big majority of the users are businesses and 2 gigabytes is enough for them. Not everybody's running video production companies where they need terabytes of data storage or whatever. So it seemed like they were having a lot of difficulty converting people from being a free user into being a paid user. They were stuck in this pot where all the other competition was also offering 2 gigabytes for free. So they can't be all of a sudden hey, your 2 gigabyte subscription is no longer free. Now you have to pay us $2 a month or whatever. They can't do that because people will just bounce. And on the other hand, cloud storage in general is just becoming commoditized. So it's kind of like an apple is an apple is an apple. I don't care which apple I buy at the supermarket. I just want an apple. Why is Dropbox any different? One of the ways we've seen them addressing these concerns is by starting to offer more services. But going back to the portion about converting users, one of the neat things you can hear when you're listening to the company's conference call is that the average revenue per user, or ARPU, has gone up a little bit. And that's a good thing to see because you can infer that they're starting to get people to pay more money. And if you already have 500 or 600 million users and like nobody is willing to pay, or the ARPU was going down, that would be like red alert city for me. So in the August video, I mentioned that the ARPU was 126.88, but since then it's gone up to 128.03. That's not like a massive, like, oh my gosh, I have to own this company now type move. And actually Dropbox's been out for a while now, but that is one of those things where it's like, they're making gains, they're making slow and steady gains, and that should be reassuring. In the same vein, they're now up from 14.6 million paying users to 15.25 million paying users. And again, this is a really small percentage of all of their registered users, but I think, especially in this next point, some of the new services that they're offering may really kick that up into high gear in the coming quarters. So my second concern for Dropbox was that increasing competition, especially from really, really big major players that are like way bigger than Dropbox, might make it really hard for Dropbox to differentiate themselves and to provide value and therefore to extract money from their users. I also mentioned Paper, this new service that they offer that's kind of like a word processing thing where you can live see other people typing in the document at the same time, and commenting and stuff is like way easier than even like Pages on OS X. Way easier to use than Word. And I found in my own personal workflow that I'm starting to be like, I use Pages for certain things and I use Paper for certain things now. And Paper is starting to become a bigger part of my daily workflow. And the team is also starting to get a better grasp of it. And one of the really neat things in Paper is that you can you have all these files in your Dropbox, you can just like plop in videos and plop in clips, and then you can play the video in the document. It doesn't take up a whole bunch of new space as if you were moving the file around. It's just already connected in Dropbox. So little cool features like that are kind of like, wow, this is really good. We're also starting to see other offerings like Showcase and HelloSign and Transfer. HelloSign is kind of a competitor to DocuSign. And we're starting to see Dropbox be like, we need to figure out a way to offer more value to make it easier for teams to work at home. And so they're starting to kind of like step on other people's toes. But one of the neat things that happens is that when you can get all of these services in one little monthly bill, then it becomes a more and more like multiplicatively more appealing option for people. I did a video on Slack earlier, and one of the neat things with Dropbox and Slack is that while they're both really growing this year because so many people are working from home or working remotely, Slack and Dropbox are really well integrated to be able to share huge files in Slack with your team while you're working on projects and stuff like that. And they work really well regardless of like what platform or what iOS or what device you're on. And those are really neat. But interestingly, Dropbox today just announced like coming soon, Dropbox Spaces 2.0, it will be coming out. And I think that's going to be an even further push into Slack's kind of territory. Dropbox Spaces 2 offers project spaces, tasks, content management, meetings, and updates. It's still in beta as far as I can tell, but a lot of those features pretty much sound like Slack might become unnecessary for a lot of teams if it just works as seamlessly as all their other services do. And so right now for my team, we have a little small business. We have Slack and we're paying Slack a few bucks a month, and we have Dropbox and we're paying Dropbox a few bucks a month. Obviously, Slack isn't going to try and compete in the cloud service area, so we're not about to leave Dropbox for them. But now, because Dropbox is differentiating themselves from other cloud storage services by offering new things like this, it might be like, dude, I'm already paying Dropbox every month anyways. We no longer need Slack, so let's just transition. And so these are some of the moves that Dropbox is making that makes it look pretty exciting for their bottom line going forward here. It seems like in general, when you're comparing Slack or even Dropbox's already existing collaborative stuff to services like Microsoft Teams, if you like your work and if you like computers it's pretty much unanimous, I think, that everybody prefers Slack. We're hearing more and more information of like, oh, this big company switched their entire thing over to Slack and stuff like that. Microsoft has traditionally been the huge ultra world dominating company where it's like, hey company, pay us $70 per head per month, I think it was. And you get Word and all the other productivity suite, plus Microsoft Teams, plus all these other things. And for big companies that are working with Azure and stuff like that, it was probably just like a quick, easy, one-stop shop type solution. But more and more larger companies are starting to switch to Slack. And if Dropbox starts to come in, and companies are already using Dropbox anyways, we might see more of that happening. That being said, it's still kind of unclear. Like we're seeing that ARPU number go up a little bit. But I think for a lot of these small businesses that are using Dropbox, the free package kind of might still just be enough. But adding on little things like this to make things easier, it might just be like, yeah, okay, we'll just pay the X, whatever it is, 10, 20 bucks a month to get Dropbox and forget Slack or forget these other services. So that's really exciting for the future of the stock. Before jumping into a little bit of the financials, I wanted to mention a couple things. Dropbox stock is owned 82% by institutions, Wall Street or big investing funds and things like that. That's not necessarily a good thing or a bad thing, just important for you to know. And number two, Dropbox's leadership is pretty good about being conservative about the way they're paid. The way they're paid is very much strongly tied to the success of the company and the growth of the stock price. They're not taking home billion-dollar salaries. Basically, it's like you need to do well and then your stock options will make you rich type deal, which is really neat to see. Next, I want to take a look at some HyperCharts. If you're unfamiliar with HyperCharts, basically a website where you can look at a lot of stocks and they graph things out for you in a way that just makes it a little bit easier to understand, especially in video format as we're jumping through. So if you enjoy these HyperCharts, click down on the link below, and if you become a member, that will help us out here to be able to provide more content like this for you going into the future. Check it out. Here we have revenue and operating income, and as we like to see, and as Dropbox is well known for, we see the revenues going up steadily each quarter. The last few quarters we've seen 455, 467, and most recent completed quarter 487. We've seen operating income as a result of gross profit. We've seen operating income kind of fluctuating a bit, but this quarter they did really well at 30 million. A couple quarters ago they were at 26.8 million, but last quarter only 12.8 million. So shows you that they're kind of getting things in order, but we'll take a look at some of those expenses here in a second. Check it out. Here is the operating expenses. We have research and development in red, sales and marketing in yellow, and then general administrative in green. Pretty much similar to last quarter, but if you take a closer look, actually we can chop these out and then just zoom in on research and development. It's actually down from last quarter, just by a couple million. Let's take a look at sales and marketing is up from last quarter, 3 million. So they may have just taken money out of research and put it in marketing. And then general administrative is holding steady at kind of 63, 65 million. So nothing super duper dramatic going on there. One of the things you want to be seeing in companies as they're growing is a growing marketing spend. And that leads us to our next chart here with margins. We have the gross margin. Dropbox is really well known for having like a super juicy gross margin. Up here in the 75%. This quarter it was 78%. Super delightful. Jumping down to operating margin and or profit margin, we wrapped up at 6.7%. Last quarter was 2.7%. Then finally, I wanted to take a look at growth, which has been another one of the complaints when people are looking at Dropbox because it's not growing 50%, 100% year over year like a lot of these other trendy, sexy tech stocks. Check it out. We have revenue year over year. The growth, it's still positive, but it's slowing down. So we've seen, for example, in the first quarter, it was 18% year over year revenue growth. And then 16%, and then 13%. So we're still growing, but the rate at which we're growing is slowing down. And then we can take out the revenue and just look at the OpEx, similar kind of story, 5%, 5%, 4%. And so we're in this position where, you know, it's no longer one of these like, wow, we grew 500% year over year. Like I just did a video on Square and you're seeing figures like that are kind of like, wow, how can I not have this stock right now? Dropbox is a little bit different, especially once they start to have a firmer stronghold in small businesses and even larger businesses. Typically, these kinds of clients are much more loyal, much less churn, and more profitable. And I think we're at this point right now where Dropbox, in my opinion, needs to really prove themselves. And I think in the next quarterly report or the next couple of quarterly reports, if we do see that bottom line starting to pick up big time, it could pick up like massively and start becoming a cash producing machine. On the other hand, can they get people to realize that Dropbox is no longer just a 2 GB cloud storage thing? They're putting money into the marketing, and it seems like people on the internet are starting to see this, but will they be able to get some of the bigger companies on board and be like, wow, this is actually way better than Teams or Slack or Box or whatever. And so for me right now, in the past, I've been like, I'm not down with buying Dropbox stock, but I understand if you're interested. I'm starting to switch more over to being a little bit, positive about it. I feel like I love the stock, but I also feel like the numbers are starting to kind of support buying the stock as well. So I've picked up a small position, nothing major, and I'm not like throwing everything at it, expecting it to double now. I think you really need to look at this company as like a longer term hold. As you've seen in the last few months, while a lot of the other stocks have been like, up 20%, down 20%, even Nordstrom was like up 30% or something in the last couple of weeks. And it's just like an old school retail company. Dropbox is just like $18 forever kind of thing. I think if you're getting into Dropbox, you need to be willing to stay in it for like 2, 3, 4, 5 years. And then you might start reaping the rewards of doubling or tripling of the stock price. So those are my thoughts. Let me hear your thoughts down in the comments section. Thank you guys very much for your time. I love you and have a great one.